Money Management 101, Finances 101, Economy 101 would all tell you that even if you're making $1 million a month, if you're spending $1,100,000 a month, you are coming up short. Applies the same way if you're making $10,000 a month, but you're spending $11,000 a month. There's a shortfall there, okay? And where is the shortfall being made up from? Means that you are expending more than you are taking in. For some, the shortfall comes in the form of tapping into retirement savings, maybe accelerating some of their 401k benefits if they're fortunate enough to have that. For some, it might be tapping into their home equity, either through a refinance or through a home equity line of credit. But they are, but they're getting it somewhere, right? It's not coming from their income or their investments. For many, though, that don't have a 401k or a home with nice equity, they are accessing debt through credit cards. And what they're doing is they are accumulating large balances on their credit cards to finance. In many respects, for many, it's just they're not being able to keep up with cost of living, okay, and with inflation. Because wages, we know, are not keeping up with the true inflation pace and the true cost of living. Some have had unexpected emergencies, medical expenses, things of that nature, a family emergency where they needed to come up with some cash that exceeded their abilities. Okay, so I'm going to share two stories with you today that I just saw out of Money Watch that I think are important. And the reason why I want to share it with everybody, I think it applies to everybody. Again, whether you're making $1 million a month or more, or $1,000 a month or more, if you're taking in less than you're spending, you've got this problem potentially. So before I jump in, I want to say thank you for subscribing to the channel. If you're not subscribed, we're getting way more views on many videos, and we have subscribers, so please hit that subscribe button so we can keep growing the community. I got a question, I think, on yesterday's or Friday's video that said basically, who is this guy? And I know it was meant to be kind of, let's say, sarcastic in nature, but I thought I would just take the quick opportunity to explain. If you haven't been with the channel for very long, I am an attorney. I'm licensed out in California, and I'm also licensed in the state of Texas. I'm inactive in Texas, but I practice in California, coming up on about 30 years now, handling primarily business, contract, and real estate litigation matters. So litigation, it's another form of a blood sport if you are in that line of work. Litigation, trial work, unfortunately, you see things, as, the glass is half empty. You see things with kind of a gilded view. And so I kind of bring that to the channel, but I also try to provide, solutions and bring it full circle. So I'm not an economist. I am not a market analyst. I am not an academic. I am an attorney, but I've always enjoyed the economics, finance, and having two young children. They're 20 and 18 now. It scares the heck out of me where we're going in this country, both from at the federal level with the debt we have, and with the consumer and the consumers struggling in this country, and the continuing widening of the gap between the have and the have-nots. So if you haven't seen the video I think I put up Friday, please go check that out. I'll link it just below the description. But one of the components was, with now Powell indicating that rates are going to be cut, that people need to, from my perspective as a layperson, stop taking on debt they can't afford to carry, right? They don't have enough income coming in to pay off as they incur it, and to start figuring out ways to pay off debt. So today's video is for all of those people, right, that have some debt And I would say that's probably the vast majority. If it doesn't apply to you, if you're sitting pretty, you've made good decisions, then that's fantastic. But share the video with for me with others. Okay. In response to that sarcastic question the other day, who is this guy? That's who I am. I try to bring a little different take on stuff, bring in legal aspects, economics, some finance from a layperson perspective. So if you enjoy the content, again, please subscribe. So again, let me jump into two stories I saw today, both having to do with credit card debt. And just real quickly, I will share with you some of the stats. And I did a video about a week and a half ago on where we are as a country with credit card debt right now. Credit card balances hit new all-time highs. Many Americans are feeling strain. According to the Fed, by the way, this is on CBS Money Watch a couple days ago. According to the Federal Reserve Bank of New York, total credit card debt surpassed $1.2 trillion earlier this year. Listen to this, with the average household carrying nearly $8,000 in revolving balances. In addition to that, credit card interest rates remain near record levels as they hover near 22% on average, which means even modest debts now are growing more expensive for people by the month. The rising cost of borrowing is also colliding with another troubling trend. Did a video on this as well about late payments. Delinquencies on credit card accounts have been steadily climbing, particularly among younger borrowers and those with lower incomes. And for some, a missed payment or two is all it takes to trigger a cycle of fees, penalty, APRs, and mounting financial stress. So, it says in this environment, many credit card holders are searching for alternatives. And this article, and by the way, the title of the article, and it's something I had never heard of, comment below if you have heard of this. What is credit card forbearance and who qualifies for it? I've heard of student loan forbearance. I've heard of forbearance of your mortgage payment. I've never heard of credit card forbearance, right? But evidently it exists. Now, the research I did shows that it was first kind of brought into existence, during and after the pandemic to help with people that ran up debts, which was only a few years ago. But there's a reason from my perspective why it maybe is being put, back on the forefront now. So credit card forbearance, it says, is a temporary arrangement offered by some credit card issuers that allows borrowers to pause or reduce their payments for a limited period of time. Unlike debt forgiveness, it doesn't erase what you owe, but it gives you extra time to get your finances in order without the immediate pressure of making the full monthly payments. Forbearance programs may vary depending on the card issuer, but they typically include payment pauses or reductions, fee waivers, late fees and penalty charges may be temporarily suspended, and interest relief. It says in certain instances, issuers may reduce or freeze interest charges during the forbearance period, although that's not guaranteed. So it is a short-term solution. So if you guys maybe are transitioning jobs, or maybe you found yourself recently laid off with this disastrous job market right now, or maybe some other issue came up where you're just overloaded. Look into that, guys. Credit card forbearance, it does not hurt. What I see over the years is many people just delay. Inaction is a killer. You've got to do something, okay? Before you go into default, before you run to the bankruptcy court and destroy your credit for 7 years, look into, okay, I'm not giving you financial advice here. You got to call your credit card company and find out if you qualify, if it would make sense for you for a forbearance. I'm not going to solve your problems, right? It's going to just kick the can down the road. But that might be, a short-term, let's say, breather for you to get back on your feet. So if it's not you, maybe it's somebody you know, or a family member, or a loved one, or a coworker. So please share the video with them, okay? Credit card forbearance, all right? And again, some people look at consolidating credit card debt. There's issues there. A lot of people, which I've done videos on this, and I don't suggest it, is they roll their credit card debt into their home equity through a line of credit. That is a disaster, and I won't go down that rabbit hole today. Debt forgiveness, when you have a forgiveness of debt, guys, when they just wipe out a balance owed, you may have, again, seek financial, legal, and tax advice, but it may result in a taxable event to you. So now you've turned that debt into ordinary, or that forgiveness amount into ordinary income. So credit card forbearance, okay, take a look at that. The next article, which popped up as I was reading this one, is kind of like I guess it's big brother, and that has to do with credit card forgiveness. If you truly are at a point where, let's say, just continuing the obligation or kicking the can down the road for 3 or 6 or 9 months does not really help you in your situation, again, from my layperson perspective, before you run to the bankruptcy court, before you decide to use the equity in your home, as an ATM and convert an unsecured debt to a secured debt, you may want to consider, forgiveness as an option. My take on this stuff, when I say pay off the debt, get it solved, use all available legal means at your disposal to do so, okay? Which means you've got to figure it out. You've got to do some homework. These are just 2 options I'm laying out for you today. If you didn't know about this stuff, it is an alternative to, let's say, a drastic solution like, a bankruptcy, okay? So now, let me just address, and this was again out of CBS Money Watch a couple days ago, who qualifies for credit card debt forgiveness. Now, there are some specific, by the way, for forbearance, guys, you've got to meet certain thresholds. You need to show there's an emergency, et cetera, et cetera. On forgiveness, you've got to meet certain financial thresholds. You have to have, it says at least $7,500, okay, of balance, okay? So it's the number simply $700 or more in total unsecured debt, though it could be as high as $10,000 depending on the debt relief company you work with. And look, you don't need to go through debt relief companies and pay them a fee, guys. You can go directly to your credit card companies. Make the call, inquire. It does not hurt to ask, okay? Just understand what you're getting into, understand the parameters before you sign on the dotted line. Talk to a tax professional, talk to a lawyer, figure it out, okay? But again, if you have a certain balance on your cars, you just cannot make those payments, you can look at forgiveness of a portion, okay, of that debt. As interest rates might, I say might, it's not a done deal yet, but interest rates might start coming down, that's going to translate in some kind of a reduction on the credit card, your APRs, but they go off of, prime plus whatever, the spread is, and the reduction in the rate's only going to affect the prime rate. So let's say you're paying 22%, and, let's say the prime rate gets reduced by 50 basis points, your rate's going to go down to 21.5%. So again, that may not be, let's say, a solution for many, okay? But we have a real problem in this country with credit card debt. Please get this video out there for me so we can start to help, especially the younger people, the people that we need in the workforce, people that we need having strong credit so they can buy homes and spend money in the economy and contribute to GDP and raise families, right? Which is also declining in this country. So, I don't want to go too long today. Again, I appreciate all of you. Thanks for, if you enjoy the content, give me a like on the video. If you're not subscribed, hit that subscribe button for me. Leave your thoughts in the comments. Always welcome. With that being said, I will talk to you soon. Bye.